Hello, 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 hello. Mic test, mic test, mic test. Hello, guys, and welcome to the 138th edition of our Trading Opportunities webinar. This is your host Nirav coming to you live at a little bit later time than our general usual time of the webinars. Before we begin with this webinar, let me run down a very quick introduction. Thank you for the confirmation, Manuel, about the microphone. And those of you who are live, of course, don't forget to say hi and let me know if there is any issue with the audio or video here. Right. So first of all, here's the very quick introduction, guys. As you know, my name is Nirav. I am the admin and owner of 50 Eyes Market Analysis YouTube channel, as well as 50eyes.com website. And this is the series of our weekly webinars where we discuss global markets. And so far, we have discussed 345 trades in our last 136 webinars. What happened with our last webinar's discussion, the 137th, we will check out in today's session. Right. The way we proceed with these webinars is we go over the chart of Euro, Crude, Gold, SPX, Nifty, and then we also check what was being discussed in the last webinar. A little bit more about my work. I'm also the author of the book Think with the Markets. It's available on Amazon's Kindle electronic delivery platform. Apart from that, our past webinars, videos, etc., have a track record of 80% plus accuracy for 6+ consecutive years, which can all be checked at 50hours.com/contact forecast accuracy contact. Right. Lastly, all the analysis that we do is just a glimpse of or a part of the bigger picture, which I do update in my private Slack group. Every trade I take and every analysis update, etc., is done here. So if you are interested in getting quick updates about everything, you can join in the Slack group, and links for that or details for that can be requested by visiting the contact us page and selecting requesting details for Slack private group in the inquiry form. That was it for the very quick introduction. And now I would like to move ahead and open up the chart of Euro, see what was being discussed in the last webinar, and then move along and discuss stuff from the current chart. So here is the chart of Euro USD. We were expecting two possible scenarios. The scenario which is on screen was suggesting that we have an B-way complete here, which will then lead to a leg down, which can take this market to 1.05 to 1.044 and possibly lower levels. And there was a second view which was suggesting upward move, but it only becomes active near the top. It was like a breakout long kind of trade here. And yeah, that's the second take. Now, we did not have any trades on this counter so far, and reasons, etc., we will discuss now when we move to the actual chart. So here on screen, we have the chart of Euro. Let me very quickly check the comments here. Manuel, first of all, thank you for the confirmation about the mic. And good evening to you, Ativat and Raghu. So now, as I was saying, we'll just now discuss the reasonings behind why I have kind of stayed out of this market and what is the current take. So first of all, what we think right now is that this market is moving like a possible flat kind of correction, the A down, the B up, and C down. Now, if that is the correct count, we already discussed this market will take out 1.05993 most likely and may even challenge the low or way, whatever it is. Just keep in mind we are using this data feed. If you are using some other data feed, your price levels and stuff may be a little bit different. Now, given the fact that if this is a flat kind of correction and this is the wave C, there is also the possibility that the C is maybe already complete, right? And if the C is already complete, then we should be able to count 5 legs within the structure. And as a matter of fact, we will look at it in just a moment. We already have 5 waves complete, which can suggest this market is ready for breakout longs. If you are 100% confident, we can take the longs here and build up the position by taking more longs as the market goes up. But the fact remains that I think this leg down is quite bearish. I'm not very interested in going long just yet. Good afternoon to you, Luis, one of our regular viewers again. So, as I was saying, we are not very interested in taking longs just yet, given this strong impulsive nature of this leg. Reasoning very simple. This C can just be having 5 waves of a wave one of the C, as in this is the one of the C, two of the C, and you get the idea here. So that is a possibility. That's why I'm not very keen on it. Now let's look at the count. Well, so far I'm taking it as a 1, 2, and 3, 4, and the fifth leg is possibly complete here. But then again, as I said, it's rather really impulsive, and when the market is exceptionally impulsive, these counts generally are of not that much relevance, to be honest. The three can just keep on getting extended, and if that happens, we need to update these counts over and over and over again multiple times. So for that reason alone, I'm not very interested in taking trades on this counter. A few things to keep in mind for intraday positions are that if we see a move below what is this 1.07679, then of course we can look for some scalp shorts. I mean, I will possibly look for some scalp shorts, but that's about it, scalp only. And second reason is, even if this market is continuing lower for a C, the wave 2 can still have the corrective up move before taking out the low. So for that reason alone, we want to be very short term on this for now. Of course, as situation becomes clear, more things will become visible. It's a wait and watch market for now. Nothing to add here. Of course, if you have any doubts based on the discussion we have done so far, you can push that in the live chat. With that being said, let's now head over to our next chart of crude oil. So here is the recording from our last webinar, which was conducted on 18th of this month. Let's see what was being said. Let's move it a little bit ahead. So there were two possibilities. I think the first one is very clear here. A up, B down, C up, and then the market is in correction for further downward movement. So basically this makes it a zigzag kind of move, possibly even complex. I don't know, doesn't really matter. The structure is basically like this 3-wave corrective structure. If the pullback is deeper, it may become complex, but then again, we don't really care too much here about the nomenclature. It does not define anything here for us. Let me see if there was something else. So here was one point. We were expecting possibility of upward movement, but that possibility was only becoming activated if we see a lag above this trend line, right? So these were the two main hypotheses which we discussed in the last webinar. Let's now have a look at the current chart. Here is the chart of crude oil. And this is the discussion or analysis from last webinar. This was the point of reference, starting point of our analysis. So what we expected was, one of the possibility was this was an A, B, and C. From here, we were expecting downward movement, but we also were aware that if the market goes above this trend line, then we will look or consider long trades. Now, as it so happened, we were able to catch this move. Let me show you the Slack post here. Here it is. Trend remains bearish. Scalp longs possible once we see sustenance above the green channel, right? And now look at the chart post here. Here we were able to capture this leg when the market was around 70.32 something. We expected this upward movement to play out, and so happened it was there in the next play, right? So that was it for our quick update on crude oil in our private group. What is this market doing now? Let's see. Let me just refresh in case it is showing some earlier drawings. They will be removed automatically. Right. So now we have a little bit of unclarity here, though the market has gone above the channel here, and we expect this to be a nested 1-to-1 formation. Let me just denote it. So if this is a 1, this is a 2, we expect bullish possibility to play out as in dot 1, dot 2, and this could be the newer upward leg incoming, right? That is just the bullish outlook, right? It does not relegate the bearish one. It's just a hypothesis at this point. So that's why I have not taken any position on crude oil so far. Now the counter view still remains that if this market was going as per the yellow count, let's say the A, B, and C, then this could also be taken as a leg down. Let's say the first leg down, heading up for a correction perhaps, and then the third leg down. So long story short, we don't have any clarity on a swing perspective. From a short term perspective, I will possibly look for some scalp plays here. Once this market takes out this high, perhaps some short term scalp plays, very quick in and very quick out kind of plays. But as such, both possibilities remain. One is suggesting upward movement, one is suggesting downward, and they are very contrary. So I'll just stay out of this market for now. It's again a wait and watch scenario. Now let's head over to our chart of gold, which has hit our upside target. And before doing that, let me just very quickly show you the last webinar's discussion. So here we are on the recording for last webinar 137th, which was conducted on 18th of this month. And the analysis was, yes, so the analysis was bullish. We were expecting upward movement, either straight off, or we were expecting a pullback to 2685, 2630, and then upward movement. These were the two main hypotheses. And yes, there were participants who had booked profits here. This is from the last webinars from Elliott themselves. Right. Anyways, now let's see what has happened so far. We did have an updated analysis on gold. As a matter of fact, I had posted something on TradingView, and let me see. So let's now head over to our actual gold chart, and here is the idea. So we were expecting that this market will head higher for the double bracketed fifth, although it did not really propagate as expected entirely. It gave us a deeper pullback, which was suggestive that we were seeing a circle wave 4 in play. From here on, we estimated that either it will go sideways and then up or straight up. You can check the commentary later on in your own time. After that, we saw that the movement was rather straight up, then sideways, hit the target level, and so on and so forth. After that, we have been following it obviously in our private Slack group. So that was just one quick rundown of the public post I made. I generally do not post anything publicly other than these webinars, but that was just one of the instances. And now, anyways, the important part, what is this market doing right now? Now, before discussing that, here's a HTF analysis or higher time frame analysis, which is kind of important at this point for a few reasons. Let's see what they are. Is that the chart? Let's refresh it and see. Yes, that's it. So they sometimes do not update the analysis here. Anyways, what I want you to focus on is from this point of reference. This is just a clearer chart. I had a lot of stuff on the other one, so I have just made a copy of just the higher time frame analysis. So from this point of reference, price level around 1973, date 12th December 2023, we have a possible impulse in play. And I'm just pointing out a quick bearish count just so we have a perspective of how things are. Now, in this bearish count, we have the wave 1 complete, 2, 3, and 4 here complete. Now, that is interesting because that means we are possibly in the last leg if this count is correct. And that means if this 5 is complete here, could be just going towards the upper part of the channel, right? Both instances are possible, but whatever the case is, if this 5 is complete, then this market can fall from here, right? If this 5 is continuing, then it can just go higher and higher, right? So main theme that I want you to remember is that the possibility of a correction kind of opens up temporarily. I'm not very much in favor of this bearish outlook for now unless we see some clear evidence, because what happens in super bullish moments is there is no 3, as I just pointed out. It just keeps extending and extending, and in that case this count just keeps getting updated and it just keeps going higher. So keeping things in alignment with our bullish view, here I am on the shorter time frame chart. This was daily, by the way, and now we are back to hourly, and I'll give you just a glimpse of the bullish outlook from this point of reference around 2602, right? So considering the bullish outlook from this point of reference, what we have is an impulse progressing in the upward direction. Within this impulse, we have completed the first and the second and the third. So basically, we are either inside the wave 4 or it's possibly already complete. I am personally assuming that this is just continuing within this sideways range. So once this sideways range is broken, the accumulation is complete, we expect that this market will take off for the fifth. So short term view is bullish. We just keep in mind that the bearish outlook is strongly possible. That means we have to keep strict stop losses. In this particular case, the market sustaining below 2709, let's say, is really weak and can be taken as a technical stop. Currently, I am not holding any longs on this counter. We booked our profits somewhere here. I think we'll check the post in a bit. But for the current analysis, the take remains bullish if the market remains above 2709, and we will look to accumulate longs, basically breakout longs. So the target or the upside entry I'll expect around or above 2756 plus levels. That's about it for gold. We are still looking for longs, and these are the two scenarios. We have also discussed HTF here, so just keep that in mind. Put it on your charts, do your analysis and stuff. See if there is anything else to add here. Yes, so we were able to capitalize on our long positions. Let's just check our entries, exits, etc. So as you guys know, we were holding longs. I don't know if that was discussed in the live webinar or not. Let me just say updated possible triangle with 4 so far so good, resistance at 2749. Target hit and exceeded. So at this point, the market had hit our target. The other target or next level was 2770. However, we trailed it to 2738, right? and then we booked profit on all longs at once. We'll look to re-enter later. So our exit was at 2744. So this was the outcome of our last long trade. You can check all the details and the entries exit of the last trade by visiting the last webinar itself. I don't want to dwell too much into it. And yes, again, if you want to become a part of our private Slack community, you can request details by visiting our contact us page and selecting the subject matter on the left. That's about it for my take on gold. Of course, if you guys have any doubts or questions, you can just push them in the live chat right away. I'll wait for a few moments before we head over to our last two charts, S&P followed by Nifty 50. And of course, do not forget to hit the like button, share the content once this webinar is complete with as many of your friends, colleagues, and social media so that we can attract the right audience and get more views, obviously. So, as for some reason, our last webinar did get a considerable number of views thanks to the guys who did share. So kindly continue doing your part so that we can keep up the streak of 1,000 plus at least, right? So thank you to those guys who have been sharing my content. Right. Anyways, getting back to our discussion. Now I don't see any questions. Am I even audible? I don't know because I haven't gotten any new comments since our last two charts. Yes, it is working at my end at least. Hopefully, it's not like you are not seeing anything. Anyways, heading over to our next chart, the chart of S&P's 500. First of all, let's look at what was being discussed in our last webinar on S&P. So here we are, and let me just push forward and see. So here we have what we can say corrective formation we are expecting and then leg up, and I was personally long on S&P, right? So this was the main theme on S&P. Thank you for the confirmation, Manuel and on Etivet. So anyways, the main theme on S&P was that we were looking for longs. It did not pan out at all. Let's look at the actual chart and take things from there. So here's the actual chart of S&P. Let me show you. That's the high time frame count, I think. Yeah, that's a high time frame count worse for us. So our last discussion was on 18th. 18th comes out to be somewhere here. So we were expecting correction and then up leg. Now again, that is still possible that this is a one and this goes for a correction and then an up leg. So overall, this and that analysis is not completely off center or not completely wrong at this point. However, what I do have is a alternate view which I want to push in front of you guys, and this is from a HTF perspective. I'm not going to go into much back data, but just going on the daily chart and taking this as our point of reference around 38 October 2023. There is a possibility that we are inside a wave 4 here. Now this is the circle 3 here. That means circle 4 is possibly continuing here as a possible flat, complex, triangle, whatever the case may be. Now this is one of those cases where the range is extended to the upside and the market may conveniently move within this extended range. Hence, to say we can see the market propagate within what is this level 5890 to 5090. That is a very big range, and the reason is we are on the daily chart. The reason for discussing this outlook is if the swings like these happen, no stop loss will be good enough. I don't want to hold something for this long of a period of time. So any longs taken should be taken with strict stop, and you should be real cautious here because of the higher time frame correction incoming. Let's just check the potential target zones below. Actually, I don't think it should go below unless it's doing something else. So this much is enough for our bearish take. Now, second thing is if the 4 is not continuing sideways within this box range, then that would suggest the 4 is possibly complete here. in which case this becomes impulsive formation. Let's call it a dot one, a dot two, and a dot three, possibly here, dot four, and then this becomes a breakout possibility. A very simple trade here, breakout longs, and the entry is 5890 plus levels, specifically speaking. And from the second perspective, from the bearish perspective, the long confirmation or the long bias only establishes if we see the market sustain above 5890. But from this bullish perspective, anything above 5890 is itself a scalp long at least. So we have a very simple view. If you want to have a confirmation, you want to see market move above 5890, see some sustenance and then take off. And that will be our cue for taking longs. But not always will the market give you opportunity to re-enter. Not always will it retest the levels. It can just blow off. So in that case, this becomes a swing long possibility above 5890. And the bearish view, let's call this as the H1, the bullish view, and let's call the second view as bearish. As you know, in the bearish view, we can see propagation within this range, and then the market can take off. So swing perspective, our view remains a little bit to the bullish side. Only time we need to draw caution is if we see market below 5090. But then again, who cares about that level right now? We'll see it in the next webinar. That's about it for our take on S&P. Not as clear as gold. There is a strong possibility of a trade here as per H1. So keep that in your watch list. This may give us some opportunities in the coming session. Gold and S&P are good for us for the coming session. So just keep them in the watch list for now. With that being said, let's now head over to our last chart. And of course, if you guys have any doubts or questions on the discussion so far, please mention them in the live chat. And those of you who wanted to only watch the webinar till S&P, do your part kindly and share the content once this webinar is finished. And of course, hit the like, etc., etc. Where is Nifty now? So here is the last webinar's discussion. Let's see what was being discussed on the chart of Nifty 50, and then we'll take things from there. So let's move it till here. So I was very bearish. As you guys already know, my take was that this market should go lower for the C leg. There was a possibility that this market has completed a C here. It does not become active unless we see a break above 25215 plus. So this one literally panned out precisely as per our analysis. Literally as per analysis. By the way, I'll take a moment here, and if any of you guys were live in the last webinar, saw it, that will be neat. But then again, we are showing it as proof on the video feed right now. One second. Okay, so I'm back here. What I was saying was this was the take, and here's the chart. It did go down. I was able to take trades on it. Specifically, this leg down, I was able to capitalize on it. 24,400 was my marked level for booking profits. It literally went there and stayed there. So I was able to actually take the maximum benefit from my setup or strategy, I should say. This was all posted in the Slack private group as well, of course. And let's see what is the analysis right now. The analysis right now is twofold. Once this leg down has initiated the possibilities of further bearish movement, right? And that basically means that this market can see lower targets. How? We'll see now. First of all, our incoming targets between 23766 and 23200, let's say. So these are the very immediate targets. If the market decides to continue, it can go further lower to what is this 22,580, but kind of inconvenient or out of point to discuss those lower levels. Now, why I'm saying out of point? Let's see that now. So first reason is that this market here has already done the kind of bare minimum thing that we expect in a zigzag. It has given us the A leg down, the B leg up, the C leg down, and three legs in a correction is the minimum we expect. Since it has already done that, that's why I said the bare minimum is complete. Second thing, the C leg should have five waves inside of it, right? And so far it looks like we may have a possible impulse in play. Now let's look at this C wave in a little bit more detail. From this point of reference, I'm counting this leg down as C. Don't ask me why. There are other possibilities. I'm not going to discuss them in this webinar, but I'll give you a hint of what other things might be playing out. Let me just zoom into this actually and just show you the count itself. So here's the count, very cleanly suggesting possibilities of 1, 2, 3, 4, and then a fifth leg down, right? So if that is the case, if this five-way progression is already complete, then we can expect an upward movement from here. That brings us to the possibility that maybe if the markets are really bullish, they can take the turn, and we have the bare minimum possibilities already in place. However, the bare minimum is generally not very acceptable for actual trade decision. So let's now take a look at the second possibility. Second possibility basically suggests that this market is actually heading lower for this marked white support region, in which case we can always say that this whole thing is just the one, this correction will be the two. You get the vibe. It's just going to extend the wave C from here, right? Long story short, we do not have a confirmation for it. We have done the bare minimum to the downside. If you were in the Slack group, we were able to capture and capitalize on this leg down. And if you were not, you still got the idea of this short setup trade, which we discussed in the last webinar with details and everything, right? So now it becomes a wait and watch kind of market. Keep it in your watch list. Definitely, it will give us some good short-term scalp plays, I believe. But other than that, confirmation, higher time frame analysis remains to be seen. Only thing I can say is that if it goes below 24089, then that will be an opportunity I would not like to miss for shorts. So below this level, I will definitely consider taking some shorts. Possible continuation of C. That's about it for our take on Nifty. Then again, all those guys who were here till the end, thank you for staying till the end. And those of you who enjoyed the content and have been sharing my work in the past, thank you very much, guys. And thank you for doing your part and bringing us a good number of views after a very long time. Kindly keep your pace up and help us reach this many views consistently, 1,000 plus at least. So share it with your friends, colleagues, on your social media, wherever you think will attract the right audience, the right mindset peoples. And let's keep doing these quality webinars. And that's about this. That's about it for this webinar. Nothing much to add. Take care, guys, and I'll see you in the next one. Good day to you, Etivat. See you guys in the next one, guys. Take care.